Welcome back to S&B Experts. Today, we bridge the gap between finance and reality with Module 3, Accounting Refresher for Modelers. This knowledge is what powers your financial models. In this module, we'll master the 3 core financial statements, understand revenue recognition, and explore the dynamics of working capital and capital expenditure. Every model starts with the big 3, the income statement for profitability, the balance sheet for financial position, and the cash flow statement for cash movements. The income statement flows from revenue down to net income. It's crucial to understand how COGS and operating expenses impact your bottom line. The golden rule of the balance sheet: assets must always equal liabilities plus equity. If your model doesn't balance, it's broken, period. The cash flow statement is divided into operating, investing, and financing activities. This is where we track the actual movement of cash in and out of the business. Timing is everything. Revenue should be recognized when it is earned and realizable, not necessarily when the cash hits the bank account. This is a fundamental accounting principle. Take a SaaS company. If they receive $12,000 upfront in January, they recognize only $1,000 each month as they provide the service over the year. This prevents misleading revenue spikes. Understand your costs. Variable costs change with volume, like raw materials, while fixed costs like rent stay constant regardless of your sales levels. COGS are tied directly to production, while operating expenses support the overall business. In your model, these must be treated differently to accurately forecast margins. Depreciation is a non-cash expense. It's the systematic allocation of an asset's cost over its useful life. It reduces your profit on paper, but doesn't touch your cash directly. In modeling, we often use the straight-line method for its simplicity, but you may encounter declining balance or units of production in more complex industrial scenarios. Working capital is current assets minus current liabilities. It represents the cash needed to operate the business day-to-day. Ignore it, and your company might run out of cash despite being profitable. The cash conversion cycle tracks how long it takes to turn inventory into cash. Watch your DSO, DIO, and DPO closely to manage liquidity efficiently. CapEx is cash spent to acquire long-term assets. On the financial statements, it's an immediate cash outflow in the investing section, but it appears as an asset on the balance sheet. Distinguish clearly between CapEx and OpEx. One is capitalized and depreciated over time, while the other is expensed immediately. This choice significantly impacts your tax and net income. When modeling taxes, start with your earnings before tax. Remember that interest and depreciation often act as tax shields, reducing your overall taxable income. Retained earnings is the cumulative profit kept in the business. This is the vital link that connects your income statement directly to the equity section of your balance sheet. The real magic happens when you link the statements. Changes in net income flow to retained earnings, while working capital and CapEx adjustments bridge the gap to the cash flow statement. There are 5 key linkages you must master to build a dynamic model. Once these are connected, your model becomes a living, breathing representation of the business. Always remember, profit is not cash. Profitable companies fail every day because they mismanage their working capital, debt payments, or aggressive CapEx spending. To recap, the 3 statements are dynamically linked. Revenue recognition and cost structures drive your operating leverage, while CapEx and taxes shape your long-term cash profile. Congratulations! You've completed the accounting refresher. You now have the solid financial foundation required to build complete, professional financial models. Next up, we dive into Module 4, Model Architecture and Best Practices. We'll learn how to organize your files like an elite analyst. I'll see you in the next lesson. Keep practicing these accounting links, and don't forget to subscribe to S&B Experts for your daily training.